What's going on, everybody? It is Thursday, August 19th. So we saw a little bit of a bounce back in the markets today. Very weak at the early opening, which was followed through from last night's weak close. But then we saw some buying coming in, and the S&P and the NASDAQ closed up. The Dow was off a little bit, but well off of its lows. Again, I have to reiterate that right now, when I look at the most important thing, for me at least, and I think that is the key thing, and it is a driver of the economy, and what happens in the economy will dictate where the stock market goes, and that's the fiscal flows, where we are actually seeing, or I'm seeing, a pickup, sort of an acceleration in the spending, and that's positive. The only thing I would reiterate from what I said in the last couple of videos, we have some things out there now on the horizon, namely the debt ceiling, and that still has to be resolved, and also the expiration or the ending of the $300 a week unemployment, supplemental unemployment benefits. That happens in September. And that will be a negative factor for the flows. And of course, the debt ceiling, we don't know. I mean, if it gets raised, then I don't think there's going to be a problem. If it doesn't get raised, then I'm sure we're going to see a slowdown, a meaningful slowdown in the fiscal flows. And like I said yesterday, that would pull support out from under the economy for sure. And it will pull support out from underneath the stock market, and it won't be a market correction that you buy. It'll be a market correction that stays in, a bear trend for a significant amount of time, and it'll probably pull the market averages down to levels where, they'll find some new equilibrium at lower levels. But I'm speculating right now. I don't know what's going to happen with the debt ceiling. And what I say to everybody is, you wait to see what's going to happen. I mean, right now, without those factors, even the expiration or the ending of those supplemental unemployment benefits, there are some offsetting factors that I think are going to be, coming into play, and they'll be positive, and that's we're going to have a significant increase in Social Security payments because of the COLAs, the cost of living adjustments in September. And we're going to have a significant increase in the SNAP program. That's a supplemental nutrition program. Those are basically the food stamps. We're going to have a big increase in those. So that'll be an offset to what's going to happen with the cuts in the unemployment benefits. And we saw cuts in unemployment benefits in June. And, June did see a noticeable slowdown in the fiscal flows. But like I said, they stabilized in July, and they've been coming back. So it's been a positive picture. If it were not for these anticipated developments, and again, I don't know what's going to happen with the debt ceiling. So right now, with the way things are, there's enough fiscal here to support the economy. I mean, we're seeing good numbers. Unemployment claims came down to the lowest level since pre-pandemic, and the number today. There's enough fiscal flow in the economy to keep it growing at, a substantial rate. And that's good for corporate profits. And if that's good for corporate profits, it means it's good for the stock market. So basically, you have to be a buyer of dips. We'll see what happens in September. I mean, it's very easy because I see the flows every single day. It's not like I have to guess what's going to happen. I mean, right now, I'm speculating on the outcome of the debt ceiling. And by speculating, I mean, I'm just guessing what's going to happen. My guess is they're going to come up and they're going to make an agreement. I can't imagine that they're going to let the whole thing just, go down the tubes. But who knows, man? I mean, in this political environment, really, who knows? Let me talk a little bit about the dollar. The dollar's been strong. And, you know, if you look at very short term recently in the dollar, like where are we now? The dollar index like 93.55 or something like that. We were down at 89 something, low 89 in January. Then it popped up to like 93, I think 40 something. Then it dropped back down, it was June or July, it was down to, again, close to 90 or something. Now it's back up. But if you can step back and get a little perspective, the dollar's move percentage-wise has been tiny, has been minute. And, you know, when you look at the underlying fundamentals for the dollar with record budget and trade deficits, there's only one position you can have, and that's short. Now, in terms of the taper, right? Taper is a non-event for exchange rates in the big picture. I understand that, you know, zombies react to that. People react to that. Oh my God, taper, that's a tightening. I mean, I've been all through this. It's not a tightening, just like QE is not a stimulus. It's a rearrangement of assets. That's all. And we have seen tapering already in New Zealand and Australia, and those currencies are weak. So, you know, you have to be consistent on these concepts. If you're going to make a case that central bank tapering is a removal of a tightening, right? If you're going to make a case that central bank tapering is the equivalent of a tightening, a monetary tightening, then it has to apply in all situations. You can't have it in the United States, oh, that's bullish for the dollar, but in New Zealand and Australia, that's bearish. No, I mean, because monetary policy has zero impact on exchange rates, all right? Now, I'm not saying it you know, doesn't have an impact psychologically short term, that people see changes in monetary policy and they're like, oh, that's bullish or that's bearish. But those are false reactions. Those are flawed understandings of what's really happening. Monetary policy does nothing other than set prices and rearrange or redistributes or changes the composition of assets, financial assets in the economy. All right? Changes one form of a dollar for another. Changes one form of an Australian dollar for another. The main factor in exchange rates is the fiscal balance and the trade balance. And both of those things are absolutely long-term negative for the dollar. So when you see something like this and you see the underlying fundamental picture, there's only one position you can have, and that's short. And you have to be able to manage that. You have to have patience with that. Eventually, the fundamentals will pull the dollar back down. Just wanted to mention that. Anyway, that's it for today. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.